Jesse, welcome back. Thanks for coming on. Appreciate you're very busy. Um, but I think this time we're going to dive straight into the questions. Um, First of all, sorry, some of these are a mix of X, Discord, Telegram, just putting that out there to people that all those platforms exist for joining the community. Um, and some of them are my own questions. Okay, let's go. So, Smarter Convert, could this be sold with a higher premium? There's a few out there, particularly the person who asked this question to be asked today, that feel like it's too good a deal for the buyer.
Yes, can and will be is sort of our current thinking. we'll, uh, we'll see how it evolves, but I agree. I think it's an incredible product, an incredible offer for the investor in particular, and the company should be able to get a little bit more of a conversion premium. I guess sort of recap for people. My math on it, this is dated as of a week or two ago, is that the Smarter Web stock 60-day vol annualized is 220%, which creates a ton of option value. It's just sort of Black-Scholes option pricing. It amounts to like 70% of the share price. The option value is equal to 70% of share price, which in theory and in practice you're not going to get that because nobody believes that 220 vol is real. For understandable reasons too. Anyway, so in theory, you get 70% of the share price in option value to split between the company and investors. In practice, it's probably a lot lower than that, maybe something like 50%. But the first tranche we did with Tobam, we took 5% of that as our conversion premium for them. And of course, we did that at a time when the price was a fair bit higher. So, that has so far been good for us, I guess. I think going forward, we'll probably try like 10% conversion premium on the next one. I think there's room to increase it beyond that, but frankly, I think it's sort of hard to get investors. You got to build awareness of this product. I think people are so accustomed, Bitcoin holders are so accustomed to being inundated with just give us your Bitcoin and we'll outperform Bitcoin by taking all sorts of hedge fund risk that we won't tell you about. And that's the thing that people are trained to be wary of and to avoid, especially after Three Arrows Capital, which was doing that and then imploded. So, this product offers a way to outperform Bitcoin really with no risk because it's an option. The stock either outperforms Bitcoin or it doesn't. And if it doesn't, then you get 98% of your Bitcoin back. So, that's your downside there. And it's ring fenced in a way where, investors know that, they have a legal claim on the Bitcoin sitting in this ring fenced entity and it's bankruptcy remote. So anyway, it's I think a process of having to raise awareness to large Bitcoin holders that look, if you want to outperform Bitcoin, you can take a bunch of risk, or you can participate in this option, this option value, where we owe you your Bitcoin if in the event where the stock doesn't outperform, you'll get your Bitcoin back, and that's the extent of the risk you're taking. So basically, there's a lot of option value in our volatile stock, and this is a product to productize that vol into something that's mutually beneficial for the company and for investors. And I think over time we will be able to raise more awareness around that, and continue to raise that conversion premium so that the company is taking a greater share of that option value. But anything over zero conversion premium is better than straight equity issuance. And I think that's the important thing to remember. Like, yes, we're giving the investor a lot of value, but it's in any case better than straight equity issuance on that day. And that's because we're productizing our vol, and there's a lot of value there, and we're going to figure out how to capture more of that as the company. But first we have to raise awareness that, like, here's a way to outperform Bitcoin that's not like hedge fund risk.
Cool. So there's a couple of things out of that. One is the you say about options. Is that something you guys organize? Is that something brokers organize? If you went if options were offered on SWC in the future?
Yeah, that's a good question. I'm less familiar with how other companies do this. I know that, you know, as the company, you can offer it directly, but that is, you know, one-offs and kind of lumpy, and you would need it to be like of great size for it to be worth doing. Obviously, then there's like market makers who are happy to you know, create that market, you know, on stocks where there's demand for that. And I don't really know how Bitcoin treasury companies currently are approaching that, but yeah, there's, you know, there's, so obviously with Smarter Convert, there's an option built in. If we were to do like a standalone options product, we would only do that if there was significant demand from large investors. I think we would be excited about market makers wanting to create options products, and hopefully, I guess that's just part of, you know, the next stage of growth for us and maturing as an asset in the financial landscape. So yeah, we'll see how that plays out.
Okay, cool. And just back to the smarter convert for a second. Is there a way for retail to get involved in it? Is there like a minimum size? Could it be a group of retail investors, you know, a bit like a book build as a group of institutions?
Yeah, good question. I always forget to mention this part. It's because of the nature of it. It has to be a pretty significant size for it to make sense. So the sort of, you know, finger in the air number we have is 10 Bitcoin is minimum size. And even in the 10 Bitcoin scenario, we would need to bundle several investors like that together into a tranche to make it make sense. But yeah, so, you know, if there are people out there with over 100 Bitcoin, I think this is a fantastic product if you're looking to outperform Bitcoin. And please reach out to us if that's of interest to you. And we would love to bundle you up with a few other people like that, and turn that into a tranche. So, you know, and really, I think most likely the next tranche will probably be some family office or something like that that's sitting on 1,000 Bitcoin, and they think, oh, this would be a great thing to do with 100 Bitcoin, you know. So we'll see how that plays out, but I think it's hard. It's hard to raise awareness about this product because people are so accustomed to just writing off any value proposition that sounds like this. But I think the fundamentals are there, and so we will eventually, you know, catch the interest of more and more people. And I think I saw that in Hong Kong where, you know, on the surface people were like, what? Why would we ever do that? But then, you know, any longer conversations I had, people are like, wait a second, that sounds like a win-win. And it really is. Anyway, yeah, so kind of 10 Bitcoin minimum, and we would need to bundle it up with a few other people. But yeah, reach out to us if either of those cases fits, you know, or if you know anybody who's sitting on thousands of Bitcoin and trying to outperform Bitcoin, because there are those whales out there who are in that position.
And there's room in any portfolio for risk, right?
Right.
So kind of a segue into another thing. Um, there's been a lot of chatter in the SWC community and a few others around defending MNAV. Um, we'll get onto the grain of salt thing. I don't know if you had a chance to read it, but we'll get onto that later.
I
But in
did.
this, okay, cool. The the thing I'm thinking is a Bitcoin backed convertible. Is that one of those tools that can be used when you're at low MNAV, as long as the premium's enough
Yes.
to kind of hopefully leverage your way out of, I don't know, a sub one MNAV or at least
Yes.
just keep stacking.
Exactly. When the MNAV, and again, I haven't studied this that much. I know that there are options. I know that we would be able to get sharp on them and implement various tools in the 1x MNAV scenario and in the sub 1x MNAV scenario. Slightly different tools. As you get closer to one, uh, in my mind, long dated debt becomes more appealing. And obviously, we kind of have the philosophical stance that Bitcoin denominated debt is better, even though you miss out on the obvious divergence in purchasing power of the fiat that you owe in an ordinary debt structure versus the Bitcoin that grows in purchasing power. And so it becomes easier to settle the debt further down the road. But in the bear market scenario, there's problems, right? And so we prefer Bitcoin denominated debt because it gets rid of all those problems. But yeah, long dated Bitcoin denominated debt is like smarter convert, but with longer duration, creates a lot of option value if you're doing a convert like that. And then that option value, the longer it is, the more option value there is. And you can split that between the company and the investor. So, we could be in a scenario where, we're at 1x MNAV. Frankly, I don't really think that's what's happening here. But if we are in the scenario where we are in a 1x MNAV, and that'll probably happen at some point, as Andrew pointed out yesterday, like maybe a couple years from now, we're in that situation. So, we need to know that we have tools, and I think we do. But in that 1x situation, if you did a smarter convert where there's a 25% conversion premium because it's a really long dated option, long dated note, and there's a lot of option value there, so you can the company can get 25% of that. Then you're effectively at a 1.25 MNAV for that transaction. And that's how you can be accretive in that scenario and get that flywheel going. And the more of those you do, the more Bitcoin yield you're generating, and you can help accelerate that flywheel, get it to a more positive MNAV, and start running the other tools that we know in the toolkit are very helpful. So yeah, that's a in that 1x MNAV scenario, that would be an approach I would be more interested in leaning into. We talked a little bit yesterday about we're aware of how Metaplanet approaches cash secured puts, and there's also covered calls to put some of your NAV to work in a way that generates income that can be used to buy Bitcoin, and that keeps the flywheel turning. So those are two options, and there are certainly others. And of course, in the sub at 1x MNAV scenario, there's other options, some of which Grain of Salt articulated the other day. Yeah, so there's a whole toolkit that differs based on the circumstances of MNAV, and we would explore whatever makes sense in the circumstances of the moment for the interests of shareholders.
Okay, yeah, let's move on to Grain of Salt's open letter. I'm probably oversimplifying it massively, but the way I read it was in a situation where you have a sub 1 MNAV, you offer up Bitcoin in kind dividends to encourage people to buy it, which hopefully pushes the MNAV back to 1. And he quoted Grayscale BTC as a sort of case study of this. What are your thoughts on that?
Yeah, I think he's right that the mechanics are there. Basically, what he's saying is like if you threaten to return Bitcoin, then the market is forced to value it not as like a close-ended vehicle, but as an open-ended vehicle where the Bitcoin NAV should be priced accordingly. Of course, the problem with that is that you're sort of giving up. You're literally shrinking the company, shrinking the scale of the Bitcoin treasury by distributing it. I guess the ideal scenario is that you threaten to do that and don't actually distribute it. But if you do distribute it, then you're giving up some of the scale and the economies of scale of your company and the leadership position that commands. You're literally giving up little by little there. So I think that there are downsides to that Grain wasn't fully articulating or was just sort of focusing on the front end of that, which is real. I think that you by having that threat that will distribute dividends in Bitcoin, that would create sort of upward pressure if you're under 1x MNAV. But there would be costs, I think, to the success of the company after that. But I think the counter argument would be, well, if you're under 1x MNAV, like you have to do something. So I understand that, and I think it was very interesting, thought-provoking. I saved it, so I would refer back to it in the future to get sharp on strategies if we end up in that scenario. But again, I think that, as I mentioned yesterday, I think that the best thing that a Bitcoin treasury company can do is everything that it can to not end up in a sub 1x MNAV scenario. And the most important thing is a track record of execution of adding Bitcoin yield. And that's why we've been very focused and very proud to achieve Bitcoin yield even during this downtrend. The last 2 months have been quite sharp contraction in MNAVs. And yet over the last 5 weeks, we added plus 28% Bitcoin per share. It might actually be a few percent higher than that, but that's the number that I have stuck in my head. So that's great, especially considering that our as of yesterday, our MNAV was 1.66, and so it only takes a couple months of plus 28% to make that MNAV back, and then anything beyond that is Bitcoin gained, and that's the whole point of a Bitcoin treasury company. So I think the best defense against a 1x MNAV or a sub 1x MNAV is running a really clean balance sheet, and we'll talk more about that, but running a clean balance sheet and then having a track record of delivering Bitcoin yield through good times and bad, so that investors can have a degree of confidence that the company will continue to add Bitcoin yield, and then investors collectively can price that in terms of their expectations of what's the value of this company in Bitcoin terms, and that's how you stay above a 1x MNAV. Of course, it's always possible you have a short-term capitulation spike under 1x or something like that, but I think the best way to keep above, keep your 2-week average above 1x MNAV is having a track record of delivering. Yeah.
Okay, cool. Whilst we all know there's no formal end of year target and the next milestone is 4,200 Bitcoin, Andrew did drop out in the Tim Kotzman in one of his marathons, 6 to 8,000 would seem like a sort of ballpark area. Is that still an area the team are looking at, and does it feel realistic given current market conditions, etc.?
Yeah, I suppose it's dependent on what the market gives us for the rest of the year, but our internal math sure looks like it's going to be possible to add a lot of Bitcoin through the end of the year, assuming any amount of turnaround in current trajectory of MNAVs, or even if it just stays around here. There's a lot that we can do, and there's a lot of traction we're getting. Obviously we've seen that with retail investors, and now we're starting to see that with institutional conversations. I don't know where we end up at the end of the year in terms of Bitcoin stack, but I think it'll be quite a bit higher than it is right now. And yeah, I mean, it sort of depends on how Bitcoin does the rest of the year, and then how quickly enthusiasm returns to Bitcoin treasury company sector. I think my personal perspective is that these equities continue to be the most undervalued in the world. Because that was the whole point of the PBID report we put out, where if you look at how quickly a well-run Bitcoin treasury company delivers value to shareholders, as compared to a traditional equity that's generating income year over year, and that turns into a PE ratio of 20, 30, 40, versus a PBID ratio for strategy of something, right now it's something like 2. And for us at the moment, it's something like a quarter of a year, so like 0.25. It's pretty incredible how rapidly a well-run Bitcoin treasury company delivers value, and I think that the market still isn't appreciating that, and is basically sleeping on the business model of a well-run Bitcoin treasury company. And of course, I keep saying well-run because there's a lot of Bitcoin treasury companies that won't get off the ground in terms of getting their flywheel moving, and there's a lot of Bitcoin treasury companies that looked like they might have their flywheel moving, and this recent bear market for treasury companies has stopped that flywheel for a number of those companies globally. And obviously, the lifeblood of a Bitcoin treasury company is having that flywheel turning, keeping that Bitcoin yield flowing, and that's what it takes in order to continue delivering Bitcoin yield and have that sort of expectation into the future of Bitcoin yield that makes them undervalued. Because so long as you're delivering some amount of Bitcoin yield, it pretty quickly compounds into value delivered to shareholders. And so I think that we're gonna see, coming out of this sharp contraction in global enthusiasm for Bitcoin treasury companies, exactly what has happened to Metaplanet already like 4 times, which is basically a full sentiment cycle. And we're accustomed to that in Bitcoin being 4 years long. And when you go back and you walk through the Metaplanet price chart and line that up with their MNAV over time, which they've published on their website and in their decks, you can see how sentiment was high here, price crashed, MNAV compressed, and then a few months later, consolidation occurs, and then a few months later, the next cycle, the next sentiment cycle, and I think that's probably what's going to happen with what's going to happen here, for well-run Bitcoin treasury companies globally, and that includes Smarter Web.
Yeah, and I think on that last point, if anyone's interested in market cycles but doesn't know much about them, there's a great book called Mastering Market Cycles by Howard Marks that could really help people kind of understand the whole euphoria at the top and the depression or whatever at the bottom. and then how it returns, and that's the market cycle. It's like a pendulum that swings.
Yeah,
It's just
right,
very
exactly. And
fun.
if you think about a pendulum, it moves very quickly from one side to the other, but then it kind of, the change in momentum is a full sine wave, right? Like it's a classic sine wave. And it takes some time for that momentum to change, and then it happens really quickly, right? You shift back to the positive side of things very quickly. I think that's how sentiment works in markets, and frankly, I think that we're kind of here right now, right? And there's a process of sentiment shifting.
Cool. Quick one for you. Is the company using operating profits to buy BTC?
I saw that in one of the questions, and I didn't answer it so that we could talk about it here.
Okay, let's go.
Um, Yeah, in fact, yes, which is a little known fact. I don't know if Andrew's even mentioned it, but a very tiny amount of operating profits has now been used to buy Bitcoin. Tiny amount. But yes, so that's not something that most Bitcoin treasury companies can say, especially in the sort of pipe era that we've been in, with how these companies have been these have how these Bitcoin treasury companies have been approached. But yeah, we now have Bitcoin purchases from operating profits, a tiny amount, but it's there.
Okay, and is there is there government risk around shutting down SWC, taxing their BTC, or even confiscating it? And I laugh because at first read, the taxing their BTC kind of sounds ridiculous, but with our current government thinking about introducing a wealth tax on unrealized gains, um, you know, what are your thoughts?
The it's wild. It's wild to watch the current political climate in the UK from afar. Wow, but yeah, when it comes to Bitcoin, I think that the most helpful sort of lens is to look at how have things been tracking recently. Like what direction has regulatory stance been moving in, over the last year. And I think the reality of what's been going on in all G7 countries really is the US came out and said, okay, Bitcoin ETFs are all right 18 months ago, right? They launched. And that's been a boon to the US financial sector and Wall Street. And then MicroStrategy has been the biggest beneficiary of that increased regulatory clarity in the US, more so than the ETFs. Like the ETFs have ingested capital, but MicroStrategy has ingested way more capital than I think anybody expected over the 18 months where there's been increased regulatory clarity. So now in the UK, and I think in every G7 country, there's been a reaction of like, well, shit, we can't just let that happen without us. All right, maybe we need to at least follow suit in some, or get sharp at least on Bitcoin. And now we're seeing in the UK, they've greenlit Bitcoin ETNs, which are not quite ETFs, but same idea. And we're excited about that because, first of all, UK investors should have access to vehicles that track Bitcoin exposure through their stock portfolios. That's good for UK investors, but it's also good for Smarter Web, we think, because the biggest beneficiary in the US was MicroStrategy as the blue chip Bitcoin treasury company, the preferred vehicle for increasing your Bitcoin ownership through a publicly traded entity, right? And Smarter Web is that in the UK. And so I think that's going to be a big tailwind for the company, and will help grow our investor base as this recent increased regulatory clarity in the UK manifests into a cultural shift of maybe you should have some Bitcoin exposure in your stock portfolio. Maybe institutional investors should allocate a little bit to Bitcoin treasury companies. And I think that era is like starting kind of now, right? Like people are back from the beach. This regulatory clarity is now out there. Bitcoin ETNs are coming. And so I think this fall, we're going to see a bit, more of that in conversations that we're having.
Okay, and are there any plans, I know you spoke a bit about this last night, to update the ATM? And the answer last night for everyone who hasn't listened to it was no, not currently, looking at it, reassessing, etc. But the other part to this question that I thought was maybe quite useful to discuss was, if it was updated, is there the possibility of making the rules opaque or obfuscated to
Yeah.
avoid playing games with it, etc.?
Yeah, I see what you mean. It's always possible. We're like, I think about this quite a bit, and I'm, every week or so I have some new idea that I run by Andrew of like would this make it harder to game, or are we being gamed? So it's on my mind, it's on Andrew's mind, it's on our broker's mind. And we run a fair bit of like spot tests to see, how are things working, and little tests here and there to see the impact of things. And we haven't seen any sort of evidence of this being gamed at all. So that's good. We could always, if we believe that that it is being gamed in some way, we could make it more opaque how we're doing it. I think more likely we would add some sort of criteria that would be publicly known that would make it harder to game. But again, at the moment, we don't think it's being gamed. We think that the global contraction for Bitcoin treasury companies has been driving all of it. And that has been painful for Smarter Web because there's a lot of people who are in heavy profits, and then some people who bought the top and are probably didn't really know what they were holding and have been panic selling, and unfortunately that's kind of what happens with an asset that's monetizing from nothing. Is like the correlations to Bitcoin are resounding in my mind of when an asset monetizes from nothing, there's a lot of profit taking, a lot of volatility that happens along the way, and it manifests in Bitcoin's case and now in Smarter Web's case as these little mini cycles. But think of, if you zoom out a little bit of where does that kind of put us now? Well, there's been fear, and there's been gloom, pessimism, and capitulation. I hope, we'll see. But what that amounts to is, in Bitcoin, it's coins changing hands to new holders. Here, it's shares changing hands to new holders who are starting their journey, right? Like people who are entering now are saying, I think this is a great entry point, and I'm not worried about the price going down further and me not having taken profit from IPO, right? The people who are entering now are like, this is a great deal, and I'm going to hold it for years. And that eventually amounts to enough shares changing hands to people like that you set that floor, right? And that's my mental model of how it has worked with Bitcoin over the 16 years and four-year cycles. And that's, I think, what we're seeing here too, as we've seen with Metaplanet over the last 16 months. So yeah, that's my mental model of what's going on. And in terms of the ATM, we feel that it's been working. It's just unfortunately been in this climate of, Metaplanet being, having a sharp drawdown, and that's kind of sucked the air out of the room for all small pure play Bitcoin treasury companies, right? And then these pipe deals have exacerbated that as institutional investors have been selling off those. So it has amounted to just a sector-wide bear market, but we've still had some green days during that. Like in the last few days, it's been green, and pretty sharply green, and the ATM has been running, and that's been, I think, it's essential for keeping the flywheel going, because the capital that we've ingested through the ATM running on the days when it's up enables us to make Bitcoin buys and add Bitcoin yield, and keep that flywheel turning. So even though the flywheel has slowed down during this period, to me, I think I think the essential thing is that the flywheel continues to move. Meanwhile, a lot of other up and coming Bitcoin treasury companies have seen their flywheel grind to a halt. And once that happens, you run a real risk of it never restarting, because you lose investor confidence. So, as painful as it is, we're probably in a relative position of greater strength now relative to the other, certainly in the UK and also globally, other Bitcoin treasury companies. I think we are stronger relative to our peers than we were 2 months ago, and that's been in large part due to the ATM running.
Yeah, just some thoughts. I don't know if you saw any of my replies on the ATM in the group, but and it's kind of part of the obfuscation package. Is it being more dynamic? You don't have to publicize the rules about it. Just that you'll take into account different variables on the day, and run it at an appropriate level in that time frame, kind of thing. And that's kind of where my head was at. And then it's just, maybe you still got the 20% rule as the cap, but then all of that room to maneuver within it.
Yeah, it's a good point. And it's possible we experiment with something like that. I do want everyone to be aware, like, we will continue to change things with the ATM, and when that happens, know that it's us tinkering with what's the best way to do it, rather than anything sort of reactive. Like, we have a mindset of, like, we can and should experiment to make things better, and maybe that's one of the things we try out. Obviously Andrew feels very passionately about transparency, and I think that with our ATM instrument, the transparency of how and when we're selling shares into the market is, I think, very valuable overall to the investor community, to know that, like, we're not selling on these painful down days. So if you remove that clarity, that might cause some second order effects of, like, people feeling like we are doing that when we're not, but we wouldn't be able to prove it. So I think there's lots of second order effects, and that's where having really simple rules helps make it not only easier to explain to people, but just clearer and less cause for people to spiral in terms of FUD about what's going on.
Sure. Okay, let's move on from the ATM. How was Hong Kong? Was it, tell us a bit about the Hong Kong trip, but also, was it a productive trip with regards to connections and, meetings, etc.?
Yeah, absolutely. It's funny with Bitcoin conference. I guess I've done quite a few things like this at this point, and it's always a whirlwind. And you talk to a bunch of people, and I think between Andrew and I, we were on like 6 panels, or presented like 6 different times on stage, and so that helps to just kind of raise awareness, right? You reach some new slice of people who weren't aware of Smarter Web, or weren't aware of how we were thinking about things, and the benefits of that don't show up immediately, right? Like, you're just sort of raising awareness out there. I would say that I was at Vegas where Andrew, and you were at Vegas too, where Andrew was representing Smarter Web on his own, made a presentation, which was basically like the IPO presentation. And not a ton of people were aware of Smarter Web. I think that was kind of your experience. You were wearing a hat that I guess you had made, because Smarter Web hats didn't exist at that point.
Yeah.
But most people had barely heard of Smarter Web at that point in time, right? And I think fast forward a few months, a lot more people were aware of Smarter Web, and that translated into Andrew not being on stage one time, but Smarter Web being on stage like 6 times, and a much bigger part of the global Bitcoin treasury company narrative. And so I think we'll see what comes of that conference over the coming weeks and months. Obviously, it's good to be on stage and present, and you reach a lot of people with that. But then the conversations that happen immediately after you come off stage are sometimes the most valuable, because those are people who really want to talk to you, and a lot of the time they're investors who have questions, who want to meet you. And when you talk to them, I think that helps build confidence in their investment, and that can turn into them increasing their positions, or it can turn into them telling their friends or family more about Smarter Web. There's also like I had conversations with a handful of family office representatives, who were trying to get sharp on Bitcoin treasury companies. Some of those are like crypto native family offices that I think Smarter Convert would be a great fit for. So we'll see if those conversations go anywhere. And then obviously you also meet with other Bitcoin ecosystem infrastructure providers, and so that's helpful to establish those relationships. So overall, I'd say it was a productive conference. The sort of intangible value of it is hard to point at, like, this is why is the exact value we got out of it. But between raising awareness for Smarter Web generally, and also starting some potential investor conversations, which by the way tend to happen in the VIP area. For people most people haven't been to the VIP areas for a Bitcoin conference, but they're buzzing with with meetings happening. So your calendar tends to fill up in between your speaking time slots with like, hey, let's meet in the Deep, which is the name of the area, and introduce ourselves, and you sort of just make those contacts. And so Andrew and I did a bunch of those, and we'll see what comes from all of that over the coming months.
Cool. So this is a specific question, but it's driven by current sentiment, etc. And I've seen the question kind of asked in different ways elsewhere. People are looking for a catalyst, or a what's the thing that's going to end this downward direction that the share price is going in. In that this was asked specifically across the whole sector, but I guess it also applies to SWC as well, directly. I'm going to tell you my opinion first, and then you can jump on. But mine is that it takes sentiment to hit rock bottom in order for the reversal to start. And it's not going to be. I mean, catalysts can help; they can speed up the process. But essentially, that's because they've lifted the sentiment, right? So, yeah. Anyway, over to you. What do you think?
Yeah, well, obviously, I've been thinking a lot about this. I keep thinking about. So I've been in crypto since 2016. A Bitcoin maximalist since 2019. but obviously, Bitcoin's price movements, I didn't know it for those first couple of years, but Bitcoin's price movements is what drove everything else, right? So I've been, watching Bitcoin for quite a while, a few cycles. And right now for Smarter Web, what it reminds me of very much is late 2018, early 2019, when the price for Bitcoin, it sort of was, it had peaked at $20,000 per coin in late 2017, and then there was a year of it trending down to $6,000, and then it seemed to be finding like a hard support at $6,000, and then the bottom fell out of it and dropped to 3,200. And I had bid orders set at 2,800 that never filled. And I ended up buying at like 9,000 because I was confident it was going lower. Anyway, that period of fear right then and irrational pessimism, where you got into a place where like it was hard to remember why you were optimistic about this asset. And if anything, there was sort of like a momentary flip to like people being confident that things were going to go poorly for Bitcoin, like over the next 6 months, right? Like including me. That was my first experience with this sort of market sentiment. So I think it got me, at that point. And since then, I've had more data points of, oh, this is how that plays out. This is, and I don't fall victim to the bottom anymore, where I first go through, I flipped negative at the bottom. But yeah, that's kind of like what it takes. If you zoom out and think about that classic market cycle of sentiment, of the pendulum of sentiment swinging, it needs to reach like a level of pessimism that is irrational, that causes a final capitulation, exhaustion of sellers, right? Like you have to exhaust the willing sellers, and that what that takes is fear and like the relentlessness of the downtrend just weighing on people to a point where they just can't take it anymore, and they sell at a place where it's economically irrational. And I think in my book, that's kind of what we've seen very recently, because that's why I like to talk about, like, over the last 5 weeks, we've added 28% Bitcoin per share, and our current MNAV is 1.66. So that's a couple months of Bitcoin per share compounding to grow into that MNAV if we're able to do anything like that, like what we've done over the last 5 weeks. So that seems pretty irrational to me, right? Like if people are selling at this point in time, they're not, in my book, appropriately valuing that capacity for adding Bitcoin per share, and valuing the company based on that. They're valuing the company based on their fear and regret and unwillingness to handle any further downtrend, right? Like that's kind of the psychological place people get into in that moment. It's like, I just can't take another 20% down, and so I'm going to cut my losses, and I'm going to regret it, but I'm going to get out. So that's what it takes, I think, for you to exhaust sellers. And then once you've exhausted sellers, what the classic shape that happens then is consolidation, right? Like there's no more sellers, but there's also not any enthusiasm from buyers for a while, right? Because people are wondering, like, is it going to go lower? And you kind of go sideways for a bit, sideways and slightly up, right? And then once that trend plays out for a bit, you start to regain the confidence of like, oh, that was the bottom. And then things can happen pretty quickly. Like that's why I ended up buying Bitcoin in May 2019 at $8,000, $9,000 per coin. And I was pissed that I had waited for 2,800 when it never came. and I could have bought it 3,200. You know, I was so pissed. I still am pissed about that. That was a big mistake. And of course, I've seen several cycles in Bitcoin and altcoins since then, and it all kind of plays out the same, right? Like this is the classic psychology of a market cycle. So it doesn't. So all that to say, like it doesn't take anything happening except that you need to exhaust sellers, and you need that irrational fear to crescendo and then subside, right? Like once you've reached like a peak of irrational fear, there's no place for it to go except down, right? Like and fear subsides from there, and then you have this sort of consolidation period, and then enthusiasm can slowly return. Of course, as we talked about with Metaplanet, and I think with Smarter Web, these things happen on a very compressed time frame. So I think, you know, if we follow the Metaplanet trajectory, it's like a 4-month market cycle, which means, you know, I don't know, 2 months of expansion and a month, 2 months of crash, and then start over, right? And at the moment, we've had 2 months of crash, so we'll see what comes next.
Yeah. Okay. So, well, I kind of want to move on to some potential catalysts, though. Two that are flying really high on the radar right now. I mean, the economic data coming out this morning at your time. Yeah, the unemployment data that's kind of looking more towards the September rate cut, which is looking likely, incredibly likely right now, which is positive for risk on assets, right? Um, but what about MSTR tonight and
Uh,
the S&P inclusion?
oh, right. Has that been announced?
No, it's tonight. It's after close, 4 p.m. your time.
And it's, so far, it's still just rumors, right?
Yeah.
Okay. Yeah. 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 We'll see. You make a good point, though, that like, you know, I think Bitcoin moves the market. Like what's happening for Bitcoin will percolate into enthusiasm for altcoins, but also especially relevant for Bitcoin treasury companies, because when Bitcoin is ripping, people are going to, you know, be bullish about Bitcoin, and they're going to be more interested in how do I get more exposure to Bitcoin, you know, and Bitcoin treasury companies fit in nicely to that. I think where we are in the 4-year market cycle, there's a fair bit of excitement ahead, just based on Bitcoin's halving schedule and how that takes 18 months to really manifest into a supply shock, a shortage of available supply that causes the price to go higher quickly. And then you layer in that macro backdrop of rate cuts coming, that will be great for all assets, but more, you know, most of all for Bitcoin, because it means, you know, inflation is coming, and then yeah, and you know, the slow, relentless march of Bitcoin into the mainstream of finance is going to continue. Like, and there have been little wins, you know, there's little wins every year, whether that's the FASB guidance being updated that makes strategy a much more compelling stock, or the OCC guidance for banks to be able to custody crypto for their clients. You know, these little things in terms of integration into the financial system, they add up and they create a tailwind for narratives too, and then it becomes kind of self-fulfilling as well. So basically, like, the march of time is good for Bitcoin, and what's good for Bitcoin is good for Bitcoin treasury companies. And I think that's especially true when you happen to have a wave of enthusiasm that I think is precipitated by Bitcoin's endogenous supply schedule translating into a supply shock that translates into a bull market. and I think there's a fair bit of that ahead, for Bitcoin over the next 6 to 12 months. And we're going to try to make the most of that. So that's part of why I'm bullish about, the fall through the end of the year. And if Bitcoin sentiment, is running hot, then Smarter Web will do really well, and we'll have the opportunity to stack a lot more Bitcoin, through fundraising, but also through increasing volume and liquidity in the ATM style instrument. So yeah, it's kind of like all things are good for Bitcoin, and all things that are good for Bitcoin create a great backdrop for Smarter Web.
And then, we spoke earlier about cash secured puts on Bitcoin to potentially generate income or get assigned cheap Bitcoin. Yeah, Bitcoin. Um, Another question came in about other ways to generate more cash flow. So, Andrew's spoken plenty of times about trying to expand the core business. What about the acquisitions? Would the aim of an acquisition be to generate more cash? Like, is that what we're looking for?
Yeah, I think the first and foremost thing that people don't always see or think about when they hear about this sort of acquisition strategy is that we have a very high bar for what's worthwhile, because for us the hurdle rate is Bitcoin, right? The hurdle rate is accumulating more Bitcoin, and then how is that Bitcoin going to perform? We think it's going to be a 30 to 50% CAGR, for the next decade, right? So if you're thinking about allocating capital elsewhere, it has to either monetarily outperform that, or it needs to have strategic value that is greater than that, right? And that's a really high bar, and we're open to, and we want to find something that meets that bar, because that would be great. But that's what investors should be aware of when it comes to our acquisition strategies. That we're not thinking like, hey, let's just accumulate any business. We're thinking this has to be better than buying Bitcoin, and has to be better than a 30% CAGR, which nothing is basically. So and there can be some strategic value to an acquisition, in the sense that it could provide some operating income, and be structured in a way where we don't have to we don't have to put any Bitcoin to work. It could be structured in a all stock and delayed payment structure that's funded by the operations of the acquisition target into the future. But again, it's a really, really high bar. And we're also aware that like management time and management focus should be on Bitcoin, and accumulating Bitcoin. So that also factors into how high of a bar it is. My personal vision is that you run the Bitcoin treasury company strategy for a long time, accumulate a massive balance sheet, and then there may become opportunities in the future to strategically add functions, basically, that could be strategically synergistic with having a large balance sheet. So in the spirit of how do you execute on growing Bitcoin yield in sort of a future state where you have 200,000 Bitcoin, right? Like, what do you do then to keep fueling your growth? I don't know, but I could see a world where like acquiring a business that has synergistic value for helping to provide more ways to add Bitcoin yield could be attractive at that point in time. But like all that to say, like our focus is on accumulating the best treasury asset in the history of the world, and allocating capital is seen through that lens, right? And it's a very, very high bar for any acquisition target.
Well, Jesse, I'd love to keep you on, particularly because the share price is pumping while we're talking.
Oh,
So
good.
it's
How
always
much is it
nice.
up?
I think it's between 130 and 135 in the UK now, so it's about
There you go.
14%, something like that.
Boy, I'll, you can tell, but I think it's a screaming buy at this point, for, for just based on our metrics and what I think, and that I think we will be able to continue to deliver Bitcoin yield. And then if you run any kind of math on that of like, say we're able to deliver 10% Bitcoin per yield per month for, for the foreseeable future. So like significantly less than we have. It doesn't take long, with those numbers for you to be, in a Bitcoin gained position versus your upfront investment at whatever the MNAV is right now, 1.7. So what I and that's why that's a big part of why I'm quite confident that we have reached some state of market irrationality, because people are emotional, and sentiment drives near-term price action, I think. But ultimately the market is a weighing machine, and the economics of what we have been doing, and I think will continue to do, are pretty incredible when you compare that to any other opportunity in the public market investable universe.
Awesome. Thank you very much, Jesse. Really appreciate your time, and I look forward to seeing everyone else next week.
Thanks, James.